Hi everyone. Today we will be building a simple buy-sell indicator, something that will be telling us when is the good time to buy or sell your stocks. Of course, when you trade, you should use fundamental and technical analysis, use 3-4 different indicators to support your findings, so to say. But in this video, I want to show you very simple method of building one indicator that can tell you when you should buy, sell shares, and you can apply other indicators together with this indicator. For example, you can apply Japanese candlesticks, you can apply a VWAP indicator to support your findings. And of course, you can try using the Stocks to Buy app that has a great screen with the candle analyst. It analyzes Japanese candlestick patterns and provides you a best time to buy shares. So you can use this Google Sheets that we'll be building together with the Stocks to Buy app and with Japanese candlesticks that indicates when the trend will go upside or when the trend will go downside. So it will be very useful, and together with these Google Sheets, you can have great tools that will guide you through your trading. So today let's build this simple thing. For that you will need Google Sheets and financial modeling prep data points. First you need to connect your Google Sheet with FMP. I will send the instructions link on how to connect your Google Sheet to FMP, and you can check the link down to this video in the description section. But then after you connect everything, in the extension part here, you will have the financial modeling prep. You connect it, obtain your API key. I'll also place the link to the API key and how you can get your API key to use this. After you input your API key, you are good to go. Just open the Google Sheets, and I've prepared this small table with the period type, stock ticker. I will explain it in this video what it means. But first, go to an empty cell and use this formula equals FMP technical indicator. And then inside of this formula, you will be using everything that is here on the heading. So let's see what is there. If you have doubts, you can always use this formula, click here, and then enlarge the cell to see what kind of parameters you can input inside of it. So first, G2, we have the ticket itself. It's a symbol. In our case, it's a Ford shares. Then we have the second parameter is the time. You can see here the explanation. Time can be 1 minute, 5 minutes, 30 minutes, 1 hour, or daily. Since I'm not that quick trader or intraday trader, I'm not doing a lot of deals intraday, so I'm not interested in this 1 minute or 5 minute charts. But if you are an intraday trader, you can use those ranges to put the smaller time frames like 15 minutes or 5 minutes, and it will give you the trade signal within 5-minute time frames. But since I'm not the quick trader, I'm not intraday trader, I will be using the daily indicator. And then the next we have form and 2 periods. So I'm taking the 3 months period from 10th of March to 17th of June. Then it's a 2 period. Then in terms of the period, first we take a 21 period because we will be building, this is the technical indicators. You can see what indicators you can build. You can build a simple moving average, you can build exponential moving average, you can build RSI, ADX, you can have a standard deviation here, but we will be using the EMA technical indicator. This is very great indicator, but usually traders use 2 indicators at the same time, so we will be using 21 and 9. I will place the link into the description so you can read what is EMA and how to use it correctly, but we will be building it with the help of Google Sheets and FMP. So now we have a 21 period for EMA indicator. And then in the type, we have a EMA because we will be using EMA indicator. If you want to use the relative strength index, RSI, you can put RSI here, and it will show you the RSI. But for this video, we'll be using 2 EMAs, 21 and 9-day EMA. Headers, we don't need it in this video, so just hit the enter button. And after hitting the enter button, it will download you all of those prices, all this information. So with the open price, high, low, close, trading volume, and it gives you the EMA or exponential moving average price. This is the 21-day exponential moving average. The next step is to build the second moving average, the 9-day moving average. I will explain how to use this EMA further in this video. First, let us build this EMA. The formula is the same formula, but this time for the E3 cell for the period, you take 9-day, not 21-day, but 9-day period. As you can see in the period, you can see the description over here, and then hit the enter button, and now you have both EMA for 21-day and EMA for 9 days. Then you can see here on the graph, this is the stock price, the blue line is the stock price, the yellow line is the 9-day EMA, shorter EMA, and the red line is 21-day EMA. This is a longer EMA. So how to read this line? Well, first, when EMA, shorter EMA, in our case, this is the yellow line, crosses the red line upwards, this indicates that the upside trend has started. And when the difference between the EMA 9 and EMA 21 is getting wider, it means that the upside trend is getting stronger. Conversely, when the yellow line crosses the red line downwards, then the downside trend is started. And when this difference is higher, when the red line is higher than the yellow line, that means that the downside trend is still there, it is not broken. But when it's crossing upwards, when the yellow line crossing red line upwards, it means that the strong upside trend has started. This is how you can use this EMA. You can simply look at the graph and define the great time to buy shares. But in this video, we'll go a little bit further. We will build an indicator that will be saying when it's the best time to buy or sell share, or maybe you should hold it for now. First, we need the EMA difference. Simply take the shortest EMA, 9-day EMA, and subtract from the 21-day EMA, and do the same thing for all the days in our observation. As you see, we have 3 months observations for every day, and do this same EMA difference for all the days. The next thing is to calculate the standard deviation, but this time I calculate the standard deviation for all the positive values. The formula for standard deviation is STDEV, and you can highlight the range, but since we're interested in standard deviation of only positive values, I take this formula, I use filter, then I take the range, this range, and then I put the condition that this range should be higher than 0. Only if all the individual numbers here are higher than 0, only take these numbers and calculate the standard deviation of those numbers. As a result, we have a standard deviation of 0.04. This is by how much this EMA deviates from the average. I will explain further why we need these numbers. Then we have this standard deviation, but again for negative numbers, because we want to separate this negative trend and the positive trend. We want to see by how much this yellow line deviates from the average, and when it goes upside, and by how much it deviates when it goes downside. That's why we divide it by positive standard deviation and negative standard deviation. For calculating negative standard deviation, I also use this filter, take the range, but this time I take less than 0. So I only take values with the minus sign, and out of these values I calculate the standard deviation. As you can see, for negative values is 0.06. Standard deviation cannot be negative value itself because it shows by how much it deviates from the average, even for negative values. That's why this value is always positive. The next thing, I take the volume for 2 weeks. Why exactly 2 weeks? Well, because I'm not that short-term trader, as I've said, and 2 times trading interval is the optimal interval for me to see how the price is reacting for how the stock is reacting for different changes, how it's reacting for company corporate earnings, for the peer company corporate earnings, and in 2 weeks a lot of things are happening, and I believe that 2 weeks are capturing a good time frame to capture all the interesting things happening on the stock market, especially now when there is a lot of speculation speculative capital in the market, and there are a lot of things can happen in 2 weeks. That's why 2 weeks can be a good range to display. But of course, you can take, let's say, 1 month. You can take 2 months time interval, but I'm taking the shorter term time interval here. The next thing, we will be building our indicator itself. So first, we want to see if it's a good time to buy the share. I'm using very simple formula. By the way, if you want to get those formulas, I will place the link to my article that I've published yesterday, where I explain how I use those formulas in more detail, and you can just copy those formulas, connect FMP endpoint to Google Sheet, use these formulas, and build this simple indicator. But if you just want to see the video and copy it from the video and repeat with me, you are highly welcome to do that as well. But if not, just read the description section where I place the link to the article where you can see, you can get those formulas basically. So this is the if condition. We have 4 different conditions here. So simply this is AND because we combine 4 different conditions. Let's start with the first condition. So first we check if the exponential moving average difference is higher than 0. This means that the yellow line is crossing the red line upwards. So we are interested in positive values to capture the upside trend. The second, we are checking another condition. So first we multiply this standard deviation, positive standard deviation, by the EMA difference to get the standard deviation in absolute values, to see in absolute terms by how much it deviates from the average, this EMA difference. Then we see if this EMA difference is smaller than the that this EMA difference is actually larger than the standard deviation in absolute terms. We do this to capture trend breakup. So if this yellow line is crossing the red line, you may say, okay, but that doesn't necessarily indicate the strong trend. But if it is crossing this red line upwards, and the difference between red line and the difference between yellow line and red line is getting larger, that means that the trend is getting stronger, upside trend is getting stronger. But by how much it should be larger? Well, I decided to take the standard deviation because to see how much it deviates from the average, and if this EMA difference exceeds this average deviation, then it means that the trend is getting stronger. That's why I'm taking this standard deviation difference, simply multiply positive standard deviation by EMA difference, and it should be less than the EMA difference itself. The third condition I am taking is the volume, and the volume should be higher than the average 2-week volume. I am doing this to capture strong momentums, strong buying interest in the stock. So if the volume is very high, that means that the buyer interest is also very high. And then I take B112, 102 cell from my Google Sheets, and it should be higher than 0.5. So what is 0.5? Let's go over here. It is here, sentiment data. To get the sentiment data, you can use the financial modeling prep endpoint. Simply press, after connecting Google Sheets with FMP, simply put the equal sign and put FMP social sentiment. And this is a very simple formula. So the symbol, stock symbol is here, Ford in our case. Then another thing, we're putting limit, just put 1, and the symbol is simply the symbol to display symbol Ford over here in the table to make it nice looking, and the header is a Twitter sentiment because we only need the Twitter sentiment from the endpoint. If you don't put this header, it will download you a lot of other things, but in this case we only need the Twitter sentiment to see what participants, like what the Twitter users think about this particular share. Then you hit the enter sign and you get the sentiment. We are interested in last sentiment, which is 0.68 or 68%. This is higher than 50%. That means that the majority of people are mentioning the Ford company in the positive key. If it's less than 50, that means that not minority of people are mentioning the Ford in the positive way. For example, if it's a 0.30 or 30%, it means that only 30% are mentioning Ford company in the positive key and 70% are mentioning in negative key. But in this sense, the trader confidence is rising. So this is a good sign. That's why I'm checking that the sentiment should be higher than 0.5. It means that a lot of people are mentioning the Ford company in more of a positive key. And then if all those four conditions are satisfied, then I put the buy rating. If they're not satisfied, I put the hold rating. The same I do for sell, but this time it's slightly different. Let's see the formula for the sell. In the sell, I see that the EMA difference should be lower, should be less than 0. This is where the yellow line crosses the red line downwards. Then the second condition is that the standard deviation negative, but this time we take a negative standard deviation. We simply multiply it by EMA difference, and it should be higher than EMA difference itself to indicate the strong stock downside. So if this gap, if this difference between EMA 9, EMA 12 widens downwards, by how much it should widen? By the amount of standard deviation at least. That's why I'm checking that the standard, making sure that the standard deviation in absolute terms are higher than this EMA difference itself. If it satisfies this condition, then we switch to the next condition. The next condition is the volume should be higher than the average 2-week volume to indicate strong, but this time seller's interest. And then I check that the social sentiment B102 sell is lower than 0.5. It means that trader sentiment is declining. And if this condition is satisfied, then I put the sell. If not satisfied, then I put the hold rating. So, and here you go. We have a very nice looking, this one I can remove. We have very nice looking table that shows if it's a good time to buy Ford shares now, and it says yes. Since it's a good time to buy these shares, we are not looking at the sell right now. So for example, we can check other things. Of course, you can customize these cells further. You can make it more convenient. For example, you can put something like Adobe, and let's see the action here. For Adobe, it's a hold. You can, of course, change it further and put something like, Microsoft, for example. So for Adobe, it's a hold. So if you want to buy the share, it's better to wait. If you didn't buy it, the hold rating means that it's a good time to wait until fundamentals improve, or maybe until the company's price characteristics will improve. If you want to sell, it's not the best time to sell yet. The company, the stock, if it's falling, it can rebound and go upwards. So better hold, not to sell it right now. Let's see the Microsoft shares. For Microsoft shares, the same rating and still early to buy or still early to hold this stock. Let's see other shares, and you can experiment and see companies that showing you the sell or showing you the buy rating depending on your site. And let's see, for example, with what happens with the Apple shares. Now let's check the JetBlue shares. Well, for JetBlue shares, you can see the sell. If you want to buy the share, the hold means that wait, don't buy it yet. It's still too early. The stock is in the downside. It may fall further. If you want to sell the share, the rating sell says yes. Indeed, you can sell the share. The yellow line crossed the red line upwards, and it's the spread is getting only wider. That means that the downside trend is still it only starting. The volume is really high, and let's look at the sentiment. No, it's not showing the sentiment for this stock this time, but still three conditions are satisfied. That's why it is assigning the sell rating for the stock. So that's how you can use this simple Google Sheets with FMP endpoints to build yourself a very interesting buy and sell indicator. Of course, you can use it with other indicators, with VWAP, with the stocks to buy free iOS application that can support your findings, or maybe not, because the stocks to buy also analyzes Japanese candlesticks and tells when is the best time to buy based on Japanese candlestick pattern analysis. If you're a midterm trader, you can also use the stocks to buy app to get midterm trade recommendation. It checks the Piotrowski score, growth potential, it checks EPS surprise, analyst ratings, and based on all of this, it gives you its own conclusions. The app gives a conclusion where to buy, sell, or hold the share, and gives you the great time to buy the share on the booming market, on the flat market, so that when you use this app, you can understand when is the best time to buy. But use this simple Google Sheets indicator if you don't have time, if you want to see if it's a good time to buy the share right now. But before buying the share, of course, you should already know if it's worth buying the stock, if it's strong fundamentally, which you can check with the stocks to buy application as well. And also I'll place the link to this video on how you can take fundamental analysis manually and see if the stock is strong fundamentally. Thank you very much for watching this video. I hope you like it. Please hit the like button and subscribe to my channel in order not to miss important videos like that. Thank you very much for watching.